Howdy, partner. I'm really sorry about that. I'm just running out of ways to start these videos. Anyway, my name is Matt, and on this channel we talk about stocks, trading, and investing. In this video, I will be sharing my thoughts on why Apple stock will not only skyrocket at the end of January, but most likely for the remainder of the year. As I'm filming this, Apple is trading around 127, and I truly think it's just a matter of time before it breaks above $150 per share. Make sure you stick around until the end because I have some pretty great news for you. I'll be doing a full technical breakdown of Apple stock so I can better highlight how amazing the current risk to reward setup is. Before we get into all that fun stuff though, don't forget about all that good YouTube stuff. If you enjoy this type of stock market content, you can join the Moon Gang by hitting the subscribe button. I'm just under 10,000 subscribers and your help with hitting that milestone would be truly amazing. Also, if you want free stocks, make sure to check out those links to Robinhood and Webull in the description of this video. And now, without further ado, let's get started. Here's a headline for you. Apple could be worth $3 trillion next year as it benefits from unprecedented upgrade cycle fueled by the iPhone 12. For a little bit of foundation, at the time that I'm making this video, Apple has a market cap of $2.1 trillion, which means that this analyst is predicting more than 40% growth. Apple's iPhone 12 success could set up for a blockbuster year that leads to a $3 trillion valuation, according to the Wedbush analyst Dan Ives, who I've spoken about quite a bit on this channel. With respect to Apple's iPhone 12, Mr. Ives now believes that Apple built more than 90 million iPhone units last quarter, above his previous estimate of 80 to 85 million. This is a pretty big deal because iPhone sales account for roughly 50% of Apple's revenue, so this type of increase will have a material impact on the company's bottom line. Wall Street currently expects Apple to sell 218 million iPhones in 2021, and Ives thinks that the number could potentially reach 250 million units. This eye-popping figure will translate into an unprecedented upgrade cycle for Tim Cook and company. This is exactly why Mr. Ives has a price target on Apple of $160 and his bull case price target is $200 per share. But wait, even more analysts are loving Apple's current performance. This analyst from Loop Capital repeated his buy rating on the company and has a price target of $155. On top of that, he's calling for a really big year. Signs should be clear with the upcoming earnings report, which is on January 27th. He thinks that there could be material upside to street numbers for both the near term and throughout calendar 2021, driven by strength in both iPhones and Macs. Now, I've talked about this a few times in my previous videos, but Apple is pretty much killing it. All of their main business segments are growing at a double-digit rate, the demand for the iPhone 12 is unprecedented, and I have a sneaky suspicion that the company did exceedingly well this holiday season. I am very excited for the upcoming earnings announcement because I think that the company will knock it out of the park and the stock will react very favorably. Speaking of which, Apple stock is in a pretty interesting and potentially favorable situation. Apple trades on the ticker AAPL, and it closed out the second full trading week of 2021 at $127. Thus far on the year, Apple is down 4%, and this is the current technical situation that Apple stock is in. For those of you who are new to the channel, here's a quick recap of what's been going on. The last all-time high came just below 138, and this came right after the company's 4-for-1 stock split. Unfortunately, when the stock split actually went through, the stock sold off and it eventually found support at 103. From there, the bulls pushed it higher and we got a rejection right at 125, and then the stock was pushed down again from October until the start of November, and this time we saw a new higher low at 107. Then from there, the stock slowly grinded higher over the next 2 months while it was following this bottom blue trend line. It got above it, below it, above it, below it, and eventually the bull showed a bit more strength and managed to hit a new all-time high just below 139, and this ended up leading to a rejection at this previous high and this trend line, and since then the stock has been selling off. It battled a bit at this trend line, and now we are once again at the support of 126-ish. Before we go over what's happening right now, there is one important technical development I need to bring to your attention. If we look at these two highs, 139 compared to 138, the stock was clearly higher, but the RSI on the bottom here wasn't. This is referred to as bearish divergence, and it's commonly indicative of a future decline or consolidation, and now that's exactly what we're seeing in Apple's chart. Since December 29th, not only has Apple been selling off, but the RSI has also been cooling off. This will allow the stock to build a new foundation, and once we have that, it will have more room to run so we can get to a new all-time high. So at first glance, I know that this might not look the best, so why am I saying that this is potentially a favorable setup? Well, in 2021 alone, the stock has caught itself at this price level on 3 different occasions, and it's very common for previous support to act as support in the future. And on top of that, if we go back to 2020, this region has acted as resistance on 3 separate occasions, and it's very common in the world of trading for previous resistance to turn into support and vice versa. So the bottom line is, between 125 and 129, I'm expecting a lot of demand to be found. Personally, I really like the current risk to reward setup. You could be conservative and watch this support at 125, which means you'd be risking $2 per share, or you could be a little bit more loose with your position and use this support at 120, which would be about $7 a share. In terms of reward, I would definitely recommend watching 139, but I will personally be holding out for at least 150. So not only is the current risk to reward in our favor, but don't forget, we also have an upcoming catalyst on January 27th, which is Apple's earnings announcement. I'm really expecting some positive news, so I'm willing to bet that the stock will most likely pop from the event. To get a better idea of what Apple might do over the next few trading days though, let's see what's going on in the 4-hour chart. Before we hop into this time frame, I wanted to quickly mention that the name of this charting software is TradingView, and if you want to try it out for free for 30 days, there's a link in the description of this video. If you decide to sign up, it is a great way to support this channel. Anyway, back to Apple. I want to quickly rewind to the start of December, where the stock was clearly battling it out at 124. Originally, I had this region in red, and that's because it was an area of resistance. Eventually, it broke above 124, and then it was rejected at the top of this region of 129, and it was knocked back down, and that's where it found support at 124, and this better illustrates what I was talking about before of previous resistance turning into support. I wanted to bring this to your attention because all of these levels of support and resistance are very much coming into play right now. Since the start of 2021, Apple stock has been in this wedge structure. The top is this white trend line, and the bottom is the support at 126. These do commonly break upward, but keep in mind that's not a guarantee. If somehow Apple is pushed down, I would look for support to then be found at 124. Now, I think that this scenario is a bit unlikely, especially because the RSI is already pretty low, but if it were to happen, I would personally love to buy more shares of Apple at 124, and I would really love to buy more shares of Apple at 120. With that being said though, I think it's much more likely that support is once again found in this region, and Apple will bounce up, test this trend line, which will lead to a breakout. If this scenario were to play out, I would expect the first resistance to come at 134, which is the start of this wedge and also where the stock was rejected on December 22nd. And past that, of course, we have the current all-time high. Over the next few trading days, my personal recommendation would be to pay close attention to how the bull camp reacts to the support at 126 and to how the bear camp reacts to the resistance of this trend line followed by 134. And a little bit farther out, make sure you're paying attention to Apple's earnings announcement. Overall, I am very much favoring a bullish outcome. I really like the current risk to reward setup, and I'm pretty excited for the upcoming catalyst. I would love to know your thoughts on Apple. Personally, I'm pretty bullish. I think that we'll see a nice pop in the stock's price after the upcoming earnings announcement, which is on January 27th, and I'm predicting that there should be a pretty solid follow-through for the remainder of the year. I would love to know your predictions in a comment below. Also, as a quick reminder, if you have any questions for me or if you just want to chat about stocks, I will be doing a live stream this weekend, so be on the lookout for that. If you want free stocks, make sure to check out those links to both Webull and Robinhood in the description of this video. And if you enjoyed this video, don't forget to drop a like. And if you haven't already, don't forget to join the Moon Gang by hitting the subscribe button. All of your support is truly appreciated. Thanks for watching, and until next time, best of luck in the markets.